We're here at SuperReturn USA in Boston, 2016 version of that, and we're going to be talking a little bit about co-investments. Why do you think that investors should consider putting together a co-investment program?
Yeah, we think co-investing is very important to a core program with any institution, and there's really three reasons that we think are important. And the number one reason, and you don't hear this a lot, is relationship. So for us, we're with very good funds, and relationships are so very important. And anything we can do to strengthen those relationships and know our managers better is a big plus. Mm-hmm. So number one is relationship. Number two is return. So there's been a lot of studies that are scaring people away from co-investing. The Harvard study saying, oh, the returns are terrible, it's the loser's game, don't do it. Well, that can be true with any kind of investment. And what we found is if you have the right strategy, you can get strong returns. And several of my other peers that I've talked to who have co-invest programs have proven they can generate good long-term co-investment returns. You know, so that's number two. Mm-hmm. And then number three is research. You know, I think you know, you can read all the PPMs, you can go to the web page, and you can read all the materials, but that's different than if you're shoulder to shoulder with the sponsor, negotiating a deal, looking into the eyes of the CEO, you know, seeing if he twitches at the at the wrong time, you know, for the certain question. It's doing a co-invest is completely different than anything you can read. And so ultimately that can help you make better decisions on the primary side, doing that kind of a deep dive and really being in the trenches. So those are the three reasons why I really think co-investing should be part of an institutional program.
Well, the one thing about co-investments is, you know, the due diligence process for doing them is very different from doing a due diligence on a fund. You know, what issues that you really need to deal with if you're going to be a co-investor?
Yeah, I think for the diligence, and it's really more about just the diligence, but the entire process.
Right.
I mean, you have to have a strategy, and that strategy is different than a primary fund strategy. And we actually internally have decision matrices, you know, not that you can ever turn this into a number, into a quantitative way of picking a good co-investment, but they're a way to look at qualitative aspects and determine, is this a good deal? So we're not going to have time to go into all of that, but there are, you know, many sort of tips and secret sauce that you're well aware of, you know, as to how you do co-investing, and that I think that's key to a certain to any program. One tip I will give, because I've noticed a lot of people don't do this, and I think it could be additive to a program, is look at attribution of the funds on how the funds do with co-invest. Okay, so the question is, you know, do they offer good co-invest? Have the co-investments in the fund outperformed or done as well as the other investments in the fund?
Right.
And a lot of people don't do that, you know, but we do that for every one of our deals to make sure that the partner or the sponsor will offer good co-invest and have offered good co-invest in the past.
Sure. And do you have any insights as to like the current market? You know, what's the current market like? Is it better, worse than perhaps 2-3 years ago? How do you look at the current market?
Yeah. Along with the market, there's 2 or 3 trends I'd like to point out, you know, in the market. Number one, co-invest has now become a core strategy, you know, with institutions. You know, you and I know 3 years ago, the question was, well, why are you doing this crazy thing, co-invest? I mean, it's why are you doing it? Now that question is sort of turned around to why are you not doing it? So if you're not doing co-invest, then somehow, you know, you haven't figured out the secret sauce and you don't know how to make co-investment a positive program. I was at a conference in Chicago last week where there was basically a consultant who had always been like very lukewarm on co-investing. You know, they were never really supporting it. And for the first time ever, it's like, we embrace it, you should do it, okay, we got it, there's ways to make money in co-invest. And I was quite surprised because 3 years ago it was like, oh, danger, danger, don't be careful, and now they've embraced it. So I think that is an important change that's going on. The second thing is, yesterday, SEC was here, so they're telling us what they're doing, and they're focused on co-invest, and they're going to protect the limited partners. And all in all, I think they have. I'm not against the SEC. I think they've done some things that we couldn't have done as limited partners without them. And I think they want to make sure that the limited partners are being treated fairly. Mm-hmm. And I'm okay for treated fairly, but I think the limited partners need to see that some co-investors are adding value to the overall process. Without that co-investor, they wouldn't have gotten the deal done. Without that co-investor, they wouldn't have got that strategic insight that made the deal possible to happen. Mm-hmm. So limited partners shouldn't be mad that somebody got a $15 million allocation and they didn't get anything. They should be happy in some situations that the fund and all limited partners got a piece of the deal. And I think the SEC is okay with that as long as it's spelled out in the strategy and a policy, it's transparent, and then I think everybody feels better about the process.
Yeah, it seems like the SEC has been very, very focused on transparency overall than anything. So.
Right.
Now, any advice for somebody who's brand new to the process, just about to start off a co-investment program? Key bit of advice there.
Yeah, I'll give you 2 tidbits. So really, I think it's about strategy and people. So on the strategy side, make sure you've thought about it, you have a framework, you understand how to make money in co-investing. Don't think you can just go in and, oh gosh, I like this sponsor, whatever he gives me, I'm going to check the box and lower my fees, and those are my returns. You have to understand that's not a strategy. And the second thing is get good people. Yeah. I mean, you and I both know how hard it is to find good people. So don't just assume I'm going to do co-invest tomorrow and I can find Bob and bring him in and he's going to do a great job. The last guy I hired, it took me 8 months to find. Right. To find a good person that has a quantifiable co-investment track record and that really sort of gets it. Right. So don't underestimate the task of putting together a good co-investment program, because it's not easy. Yeah.
Thanks. I think we've come to our allotted time, but it's been a very informative conversation.
Okay, and Kelly, great seeing you again. I always enjoy talking with you. Take care.